Hello and welcome to On the Record with me, Shereen Bhan. We're here at the Mahindra headquarters in Mumbai to talk about what the story looks like for the group going forward. Since he took over, Anish Shah has been very, very clear about the fact that he wanted to consolidate operations, but he also wanted to focus on accelerating the core business as well as identifying what he calls our growth gems. To talk to us about what the road ahead looks like is Dr. Anish Shah. Always a pleasure. Many thanks for joining us here on CNBC-TV18. Many milestones that have been marked by the group and under your tenure, 10,000 crores as far as profitability is concerned, and a big rise in market cap. Of course, the markets have also moved higher from 2.41 lakh crore rupees in 2021 to almost 3.81 lakh crore rupees today. You know, in our last conversations, you spoke about the need to focus on return ratios. You spoke about the need to repair the balance sheet. You spoke about the need to re-energize the core business as well as look for new areas and engines of growth. Where do you believe you find yourself in that journey today?
So, Shereen, first, good morning. Pleasure to be here with you. And we feel very good about where we are. I think our teams have done a fantastic job. We've had a very strong heritage. And many may not know this, but we were the best performing stock in the Nifty from 2002, almost at the inception of Nifty, till August 2017. And then we sort of had some challenges that we worked through. And what gives us a lot of pride is that we are once again the best performing stock in the Nifty for the last 21 years. Now, this is something that one may not expect of what we would call a diversified federation of companies. But Mahindra is really the India story. We operate in 70% of industries that make up India's growth over the next decade. And what we are seeing is all our businesses are starting to really fire on all the cylinders. We started with discipline and capital allocation. As soon as we had a good handle on that, we pivoted to growth. And what we are seeing is mega growth across many of our industries. We've ratcheted the bar for growth as well. So as we look at our core businesses, auto, farm, Tech Mahindra and Mahindra Finance, we see tremendous growth on the auto side. Farm is in a very good shape. Mahindra Finance has gone through a year of turnaround. We still have another year to go, but it's on a very good track. And Tech Mahindra has had some good wins and really getting poised for a greater turnaround under Mohit Joshi coming in as a new leader. So we've got 4 core businesses in excellent shape. Our growth gems were started with a target of getting to $1 billion of market cap in 3 to 5 years. We saw that many are getting close to that target, so we took the bar up a notch higher, and we said that's not enough. Now we need to grow 5x in the next 5 to 7 years to remain a growth gem. And many of our growth gems have taken up that challenge. 2 of them have got external funding, and external investors have accepted the plans that the business has as well. So today I would just say that our teams have done a fantastic job, very proud of what they've done so far.
Well, you know, that's a very comprehensive overview of where things currently stand for the group. But let me pick up, since you spoke about funding, let me address a clarification. There is a lot of speculation and rumor around the fact that you're out there in the market looking for more funding as far as the EV business is concerned. I know you've just put out a disclosure to the exchange saying that there is nothing imminent or on the anvil at this point in time. But what should we understand that to mean? Are you actively looking at raising more money for the EV business at this point in time, or the 10,000 crore rupee capex plan that you have, is that already in place?
I'm glad you asked that, Shereen, because there continues to be lots of rumors.
Practically every week.
Right? And, you know, 3 weeks ago or so, there was an article saying that we are not looking for funding, etc. So we have never actively looked for funding in our EV business. Even when BII came in, we had discussions with them at that point on a variety of things across the group. And they were very interested in EV. And we said that we have enough capital. We are generating enough funds in our auto business. So we really don't need it right now. But at the same time, as they felt it was important and we felt that they could help us grow the business well, we said, let's develop something. We didn't have a business plan at that point either. And they kindly offered to develop the business plan jointly, which we did. And we went ahead with that funding round. We have not appointed bankers at that time, nor now. So we have not been actively looking for investment. We have had a number of investors reach out to us. And with a select set of marquee investors, we continue discussions. And if someone is very keen and we find the right mix and we feel that they can add value to us, then we will go ahead with it. So that's where we are right now. We are not keen to dilute a lot.
So how much do you believe that you would like to dilute, since you said that you are in conversation with several marquee investors at this point in time, though nothing close to closure? Or is that me putting words in your mouth?
Let me just say at this point that BII has come in with a 2.5% to 3% stake. And we may look at another 2.5% to 3% stake at some point in time. Now, whether that happens in the next month, whether that happens in the next year, is something I don't know at this point in time.
The probability of it happening in the next month versus the next year, what are the odds on that?
Well, I think different people may put different probabilities on it. So I just leave it.
Since you're the team lead.
So I'll leave it at that at this point in time, because these are always uncertain things. So I think a lot depends on both the investors and us seeing the right match.
But the BII coming on board as a second round, or are you likely to bring in more along with BII?
I think BII has already put in their investment, and that investment is in tranches. So we will see that investment coming in tranches. So there may have been some confusion in the market saying that the tranches may mean they're putting in more funding. But that's been announced, that's public already. So the discussions we have right now are a set of marquee investors in addition to BII.
Okay, in addition to BII, and no timeline yet on when those conversations are likely to close.
That's correct.
Okay, so let me move away from the EV and the auto business, because that is the business that the market understands, and that really has been the core business as far as the group is concerned. Let's address the other two businesses that you spoke of and gave us a quick snapshot on, and I'll start by talking to you about Tech Mahindra. I know that this is a business you're very bullish about. You believe that there is significant headroom for growth, but there's also significant headroom or a distance between where Tech Mahindra finds itself and where the peers versus Tech Mahindra are, both in terms of growth as well as margins. How do you change that?
So first, I'm glad you're looking at things beyond the group, because we've often been looked at as an auto company. But as we look at our 10,000 crores of profit last year, 20% came from auto, 30% from farm, and 50% from services. So I go back to what I said earlier, which is we're really the India story. We play in a number of industries where India is very well positioned today. And coming to Tech Mahindra specifically, we are below on margins, and therein lies the opportunity. Similarly, Mahindra Finance had not performed as well as its peers had. And this is something that we had to first acknowledge. We had to find why that was the case and address it. And I think the team there has done a very nice job now addressing that. And we see a much stronger performance over the last year. And with the changes that are being put in place, we will see Mahindra Finance really lead the market. Similarly, in Tech Mahindra, we feel that there have been a lot of good wins in expanding beyond telecom, in having new accounts, large accounts come in. There needs to be a lot more work done on margins. And Mohit Joshi, as he comes in as a new CEO, working closely with CP as the outgoing CEO, will work together to address that. And we feel that we know today what needs to be done. It will take time. It's not going to be overnight. But I would give it a 2 to 3 year horizon for that to happen. Similarly, in terms of what we've done with Mahindra Finance.
Okay, so 2 to 3 year horizon, that's what you're factoring in as far as the turnaround plan is concerned for Tech Mahindra. You said you know what needs to be done. If you could break that up for me into key priorities, what do you believe needs to be addressed at this point in time, specifically for Tech Mahindra? Because the challenge is also going to be at this point in time, you want margins to go up, but also the question is, are you willing to invest in the business at this point in time, and what could that mean?
So first, Tech Mahindra is a cash-rich business and continues to generate a fair amount of cash. So investments may not be required. If we do make investments in terms of acquisitions, we would do so very, very carefully, because that's one lesson we've learned, both at the Mahindra Group as well as at Tech Mahindra in particular. What we need at this point is to, one, maintain the customer centricity we've had. Tech Mahindra is one of the most customer-centric companies in this industry. Second, continue to diversify beyond telecom. We've had some good wins in financial services, in insurance, in healthcare. Continue that as we go forward. Continue the large account wins as well. And have a very strong delivery setup that allows for increasing margins and narrowing the gap between where we are versus competitors. So these are the three sets of things that are required. It's not rocket science in that sense. The team has already been focused on it for some time. The first two, I think, have been achieved to some extent. And the delivery part and increasing margins is the third that needs to be
So
achieved.
what has been your message to Mohit Joshi? You've articulated very clearly what you would like to see being changed at Tech Mahindra. But what's the mandate to Mohit?
The mandate to Mohit is establish market leadership for Tech Mahindra. Is essentially addressing the questions you started with, which is we are today lower in margins versus our competitors, and we have opportunities to be able to increase that. So with that established leadership, beyond that, an important element that Tech Mahindra is really focused now is staying at the cutting edge of technology. And this is an area where we're seeing a much stronger synergy with the Mahindra Group on a number of things. There are a number of projects on generative AI we are running across the businesses. We've had metaverse put in place in 4 of our industries. And these are things that help Tech Mahindra stay ahead. Work with the Mahindra Group to create pilots. We have a 5G pilot going on at Chakan, as well as a few other things that are linked to it. And take them to other customers around the world, having shown proof of concept in specific industries. Now, this is something that we feel will position Tech Mahindra very well again versus its peers, and position it as a leader in its space.
Let's talk about the other business that you spoke of, where you had acknowledged to me when we last spoke that there was need for correction, and you've been on that path, of course, correction. I'm talking about Mahindra Finance. You've also got leadership change on the anvil there. Raul Rebello will take over when Mr. Iyer retires in April of 24. How satisfied do you feel in terms of where the ratios stand today? And what's the aspiration now in terms of growing that business in terms of disbursals?
So very satisfied today in terms of where Mahindra Finance is. We had acknowledged that it had performed poorly versus its peers over the last few years. And we had outlined the set of actions required. All of those actions have been taken. And Mahindra Finance is on a very strong trajectory right now, as seen from its results. Raul came in as the Chief Operating Officer. We've elevated him to the CEO, so he's been a big part of this turnaround already. And therefore, it's not someone new coming in to be able to set it up. He's a fantastic leader. We had a very extensive search, and the board felt that Raul was best positioned despite a lot of very strong candidates across the industry, many from banking. And we've got a very strong team in place now. There's a huge focus on technology and data. There's a tremendous focus on asset quality and ensuring that we maintain a very strong asset quality. And the results today bear that. We've had GNPAs in the 8 to 9% range in the past, went up to 16%. Today they're in the 4 to 5% range. And it's not just where they are today, it's the actions taken to ensure they don't go high again in the future at any point when there's an economic shock. So these are things that are really enabling Mahindra Finance to start showing the strength it has, because the rural and semi-urban franchise that Mahindra Finance has is better than anyone else that we've seen around. And that's something that has been, in a sense, hidden by some of the challenges in asset quality we've seen in the past. More the volatility, not the losses, because the losses never came. It was just volatile in terms of provisions. But having taken that volatility out, I think it will help Mahindra Finance really be able to show the strength of its franchise.
One of the aspects linked to the volatility that you spoke of and the fact that you've been able to do away with that is the digitization process. Where are you at this point in time in terms of digitization as far as Mahindra Finance is concerned?
I'd say halfway in our journey. It is a very significant, almost a complete revamp of the business. All the core systems are being changed. The processes are being changed. We've got a separate team focused on the consumer focus and making it as easy for the consumer as we can. So all of those things, and beyond technology, data is a big part of it as well. So we're looking at analytics playing a huge role in terms of how we source, in terms of how we collect, and essentially making it a much stronger business.
Speaking of strength as far as the business is concerned and future opportunities as well, what role do you see in partnership or collaboration with fintechs, if any, at this point in time for Mahindra Finance?
We have been working with technologies. We also have been working with some of the established banks. And we've got with Bank of Baroda, we've got a co-lending agreement as well. We're working on the same with SBI. And that's something that will help Mahindra Finance be stronger. So it's working with the large banks, it's working with the fintechs, it's bringing in technology, it's bringing in talent that will really transform the business. And a lot of these actions have been taken already.
The NBFC space is also a fairly competitive space at this point in time, and there have been regulatory changes that have been brought in by the regulator there as well. How do you evaluate the landscape at this point in time, given the competition, and where do you believe you will need to do more to be able to take on the competitors?
So I think we are very well positioned because of the model Mahindra Finance has. That strength, as I mentioned earlier, we haven't seen anywhere else. Regulations are welcome for us because we are a very well-governed company. And for us, it's important to ensure that the consumer is protected. Now, RBI basically is very focused on consumer protection. That's what we want as well. So from that standpoint, that doesn't faze us. In fact, it's better. It improves the industry overall, and in many ways, it plays to our strengths.